While mass layoffs in the financial industry continue, we watch the continuous bailouts of Wall Street amplify the bubble. The mega corporations always have a way out since they are interconnected at levels we cannot see on the surface. The central banks have one very specific goal, and that is to ensure that the elite establishments are well taken care of, and this must come at the expense of the average person. They must do this in order to persist. The middle class is evaporating, and that is absolutely not a coincidence. Here we go. You came here for the truth, so let me unveil that for you. I have an incredible video today. First, we're going to talk about what's happening with HSBC. Going to get into some details right there. Massive changes happening. I'm going to look at what Janet Yellen and Ben Bernanke had to say. We're going to talk about the ECB and their corporate sector purchase program and how that intertwines with Louis Vuitton. And then I want to talk about what's happening right now with the supply chains related to China. I've got all the details in this jam-packed episode. Stay with me. Here we go. HSBC to slash investment bank, 35,000 jobs in strategy overhaul. That's what they call it. It's just an overhaul, just some changes. No big deal. Well, this is brand new information coming out, and we have seen what HSBC had called for last year. We have seen other banks that are out there and what they have been doing. I've been covering that here on the channel. I've been giving you updates on it. I'm going to show you what had happened recently in this industry. I got some charts and things to show, but basically you can just see what HSBC is up to in 2020. Now, the number 35,000 is one number that I've been hearing about. Previously, there are some other numbers thrown out there, but this is what we have right now. We will see how it actually happens because they claim that this is going to be over a 3-year period, but I don't have numbers that are consistently being updated. I'll give you what I can as those numbers come out. In this article, they also say that they're stopping their stock buybacks. Now, this is important because people rely on that. You know what it does to the stocks. And what if your favorite stock announced tomorrow, no more stock buybacks for the next 2 years, just like HSBC, a major corporation, is or has been doing regularly, suddenly they stop? Of course, that's going to be a problem for a lot of people. This right here is just showing you their own statement from their own website. I always give you the facts directly from the source. I wanted to show you this in case you were interested about it. This article here was from 2019, and I wanted to just show you how this has progressed. Any job cuts implemented as part of the latest plan would come on top of the redundancies announced earlier. HSBC said it would be laying off about 4,000 people this year and issued a gloomier business outlook due to an escalation of what's going on between China and the US. As I was trying to allude to previously, they're just saying here that the former CEO, when he took the job, was planning to cut 30,000 people. Now we have 35,000 people on that list. Look, there's a lot going on. I don't know what the exact number, I don't know the head count and everything. It's 35,000 plus at this point, and that is a relatively short time frame and is a large percentage of the company. I've shown you this article before out of Bloomberg, just giving you an idea of what's happening in the financial industry. Banks around the world are unveiling the biggest round of job cuts in 4 years as they slash costs to weather a slowing economy and adapt to digital technology. That's not even true at all. This year, more than 50 lenders have announced plans to cut a combined 77,000 jobs, the most since 2015. In the third paragraph, the 2019 cuts bring the total for the last 6 years to more than 425,000. In fact, the actual amount is probably higher because many banks eliminate staff without disclosing their plans. I've shown you all the details related to this before. I didn't want to harp on too much. I just wanted to show you that, look, it's not just one company doing that. Job cut plans announced by banks this year are at the highest since 2015. You can see on the right-hand side. For 2019, it was 78,000. And I don't think that was the final total either, but this is what I had for you, just showing you it's continuing. Now, my friend and yours, Janet Yellen, had some very interesting information to share with us. And I wanted to bring that to you because we're going to see it. I've talked about this many times before because you know they are dropping these hints everywhere to acclimate the public. Yellen said Fed purchases of stocks, corporate bonds could help in a downturn. This article is out of Reuters. The Federal Reserve could get benefits from buying assets other than long-term US debt if in a future downturn it could not buy any more government bonds, according to Janet Yellen. Isn't that interesting? We bought all of the bonds that are available. So what do we do now? We've got a printing press that's just sitting there collecting dust. Well, why not buy stocks and bonds to help out the corporations directly? Well, we've seen that before with the ECB. It didn't work for the ECB, that's for sure, didn't work for Europe, but why not try it in the US? Just help those corporations out. Referring to the asset purchase stimulus programs, quote, if we found, I think, as other countries did, that they reached the limits in terms of purchasing safe assets, like the longer-term government bonds, it could be useful to be able to intervene directly in assets where the prices have a more direct link to spending decisions. She added that buying equities and corporate bonds could have costs and benefits. In the next recession, whenever that happens, you know exactly what's going to occur. They're going to come out with some sort of quantitative easing program. They're going to drop interest rates to 0%. They're going to get to the 0% mark, and then what do? They're already at the floor. Well, they need to break ground. So perhaps they'll go into the negative. But we have Jerome Powell saying, no, we're going to stop that. We're not going to go into the negative, and instead, we're going to rely on QE. So we can expect some massive QE to occur. But these QE programs are ultimately only so powerful. How far can that push up stocks if they're not buying the stocks directly? If they're not buying the corporate bonds, what happens with the accumulation of debt that these corporations have? It's a big burden on them. So if we use this new type of QE, let's call it QE5 in this instance here, and we buy up all that pile of garbage. Let me just draw a nice pile of garbage in here, all right? And then we can get the QE5 to buy up that pile of garbage. Isn't that fantastic? That's right. And then there's stocks. We can have a nice 7 share of Amazon, and then the QE5 comes in and buys all 7 shares of Amazon. They do this, and what do you think happens to the stock price? Well, of course, it looks fantastic. But as a result, we devalue the currency. Your money will obviously decline. But hey, the dollar is doing well. Why would you ever say that it's declining when I look at the value of the dollar and it's fantastic? Well, people need to understand what they're spending their money on. Are you spending your money versus other currencies? Does that make any sense to you? Are you constantly going out there every day and buying other currencies? No, you have to buy real goods. You have to buy electricity. You have to buy gasoline. You have to buy natural gas, and you have to buy food, and you have to buy tuition perhaps, and maybe you're buying healthcare. All of these things are more expensive. All of these things are more expensive. Yes, I understand your house price went up, but the electricity to run that house, the property taxes on that house, and every other thing you put into that house has also gone up. But on occasion, when the price of those homes goes down, do you think your property taxes are going to go down in line with that? Just like when you see the price of oil going down, does gasoline come down in line with it? Of course not. Look, you're always getting screwed over, and until people realize what's going on with these central banks and what they're up to, I don't think they're going to get the full picture. Now, this was Ben Bernanke from 2010, and he's talking about the quantitative easing program, trying to make excuses for why it's okay to, print money out of thin air and buy a whole bunch of garbage. This approach eased financial conditions in the past and so far looks to be effective again. Stock prices rose and long-term interest rates fell when investors began to anticipate this additional action. Easier financial conditions will promote economic growth. For example, lower mortgage rates will make housing more affordable and allow more homeowners to refinance. Lower corporate bond rates will encourage investment, and higher stock prices will boost consumer wealth and help increase confidence, which can also spur spending. And he goes on. Ultimately, what they're saying here is that it's okay to print a whole bunch of money and buy stuff because that helps the economy. And we have seen time and time again where that isn't true, and I'm going to save something for the very end to talk about. But let's look at the ECB. Here you can see all the different programs. By the way, this is from the ECB's own website. I always give you direct from the source. On occasion, I hear people say, I don't understand what you're talking about. What are all these acronyms and so on? You can see right here when you look at the different programs that the ECB has. Okay, and this one here, the CSPP, is referring to corporate debt. They actually go out there and buy the debt of the corporations. And you might think, what exactly does that mean? Well, you got to think about all of these different companies, any of the German car manufacturers, anything, you name it, it's on there. I've shown you the list here before on this channel. I gave you a breakdown of that. But every single month, they go in and actually buy up the debt of these different corporations, if you could believe it. So what we have are these corporations going in further and further into debt. You don't have to worry about it because you're going to have the ECB printing money out of thin air to buy it. It's a bailout. It's a constant bailout that's been taking place for years and years on end. For a period of time, they basically had stopped their monetary easing. Give or take, it was happening, depending on the month, depending on which program and so on, but it wasn't to the scale that they were doing in years previous. Then they started to ramp that up again, as you can see, and stocks have largely been performing better than they were prior to this. We know what's going on in Europe. Of course, they're in a huge mess. Now, I wanted to look at something I thought was really interesting. Louis Vuitton set to raise $10 billion plus from bond markets for Tiffany deal. I say Louis Vuitton, but really it's LVMH. The top dog in this corporation being one of the top, I think he's like the third or fifth richest person in the world. Well, he's about to get a nice big bonus. I'm telling you that right now. Check this out. So they're issuing this debt. They want to buy this company. They want to buy Tiffany. But who's going to buy that debt? Well, investors might buy that debt, but wouldn't it be interesting if the ECB comes in and bought some of that? They print the money out of thin air. They buy the debt of this corporation. That corporation specifically is issuing that debt in order to buy another corporation, which by the way happens to be American, and the cycle is complete. Well, doesn't that seem so unusual to you that they're gonna go out there printing money and literally handing it to their friends? People should be outraged every time they see money printing, but instead they celebrate it, and that makes me sick. It makes me sick to my stomach. Right out of Bloomberg, France's richest man can thank the ECB for the state of affairs. The restart of its 189 billion euro corporate sector purchasing program has driven credit spreads even lower. The central bank wants to lessen the funding cost of European companies to make it easier for them to invest, and it may not have been meaning to help the French luxury behemoth snap up an American jewelry icon. Bottom paragraph, it's almost certain that a bond of this size will have been bought by the ECB or will be picked at some point in the near future. It goes on to talk about the details of that. I need to move on, but I want to know what you think of this. Remember how absolutely key all of this is. If you start to pick apart the pieces, then you realize the mad scientist, the money GPS, what he's thinking. And I'll tell you right now, it has nothing to do with the 401k. Okay, looks like I'm running out of time. Let me just cover this thing right at the end. Maybe I'll do another video for the morning or something. Look at this. Civilian labor force participation rate by age showing you 96, 2006, 2016, and projected 2026. And what I wanted to give you some insight on was simply that these people right here, 65 to 74, typically these people would try to retire at that golden age of 65. Can they do it? Well, of course, then we have the Freedom 55, people retiring between 55 to 64. And you will see a trend in both of these cases that as time moves on, we are seeing more people at a later age not just working, but requiring to work. And why is that the case? Because they got healthcare costs that are increasing, because all of the expenses which they have are rising, and yet their income isn't there to support it. What does that tell you about this current system? It's messed up. It doesn't work. They might have 401ks. Remember that. These people here who are 55 to 64, who are 65 to 74, maybe they got a 401k. Maybe they have a pension. I'm not aware of the details of the situation, but many people do. Maybe it's not big enough, and we can go into the details of that, but understand that people need to work today. I have shown you the details over and over and over again. You look at different studies they've done, somewhere between $400. I've even seen somewhere between, $200 and let's say $1,000, and that's it. If people have an expense that is somewhere in this range, it will break them. It will break them. And that is sad, because the central bankers are directly responsible for everything that we see today. And it isn't until we own up to that fact that anything is going to be done about it. That's all for this video. If you found that informative, please give me a thumbs up. That's all I ask. I get about 10% of people that just click a button on the screen. If you would do that, it would really help out this channel. Thank you very much. For those who watch the advertisements at the beginning, that's also amazing. Thank you. I really do appreciate it. It helps a lot. If you want to learn about e-commerce, if you want to know how to sell on Amazon, then this course is for you because you don't have to pay a dime. Other courses out there, $1,000, $2,000. This is free. I created it for you, my subscriber, theamazongps.com. If you want to understand the financial system from its core, you don't need to read 1,000 books. You don't need to read any encyclopedias and go to school for 10 years. These 2 books give you the download. They give you what you need and taught so easily. Check them out at the link in the description if you prefer the audiobook, themoneygps.com. I've been covering very closely what's happening with China, with the supply chains. All these details are located in this video right here. Definitely check it out. Click on it. I will see you there.